Alphabet's tapping Australia's bond market for the first time, looking to raise about $3.6 billion, the latest in a global borrowing spree as it ramps up spending on AI. But as big tech piles into debt, are investors starting to push back? For more, Bloomberg Intelligence senior credit analyst Robert Schiffman's with us. Look, I asked you earlier this morning, how is this the same or different to what Alphabet's done in dollar-denominated or other non-dollar-denominated markets? And it's kind of a continuation of the same thing, right?
Yeah, this is just a little blip on the radar screen. I mean, basically raising $3.5 billion in Australia doesn't really move the needle. It just shows that there's a considerable amount of demand around the globe for high-performing hyperscaler debt.
Why would a company as ginormous as Alphabet need to go to the debt markets? Is it just as simple as internal cash flows just can't sustain the wild capex commitment that's out there?
Yeah, I mean, they teach you this day one in math camp. You know, if you spend more than you make, you got to borrow. So that's what's happening here is they're just spending more than they're making right now. I think it's temporary. We continue to talk about a 2028 inflection. And I think these type of companies are going to become cash cows once again. The reality, though, is the more the media and all the smart money guys on podcasts and webinars keep talking about things like circular financing and how AI is not going to work, I think optimism continues to get stronger and stronger. And I think the bond market has proven that they are there to support this build out. And in fact, if you just look at the last couple of weeks, spreads are meaningfully tighter. The widest names in our universe. Oracle, SpaceX are 30, 40, 50 tighter. Amazon did Alphabet did a $25 billion bond deal just a week ago. Those bonds are tighter as well. So I just think people need to stop, just listening to podcasts and start looking at the facts, and that AI monetization is here. It's only getting bigger, and the financing is in place to get it built.
So Alphabet kind of is top of the pile, right? They've done about $115 billion, excluding Australia, since the middle of last year. But you're basically saying investor demand is there, and it will continue to be there. Investor
demand is there. It's across the board. Remember, Alphabet is in the midst of issuing $85 billion of stock. They've done now about $75 billion of debt across currencies, Swiss francs, pounds, yens, Canadian dollars. Already year to date. Listen, they're going to spend over $300 billion of capex next year. They're spending $200 billion this year. They need to fund it, but eventually we're going to see an inflection point. It's going to turn around. I think bondholders are going to win in spades.
Robert Schiffman of Bloomberg Intelligence, thank you very much.